We are a national development bank, but focused entirely on the small business, and our goal is to improve the finance conditions for small business in the country. So what you can see is that you've got London, who is the top, Liverpool second, Cheshire and Warrington third, West of England fourth, just to name several. So London remains in the lead, but the numbers are growing faster in the regions. And Liverpool, just as an example, if you took this stat 5 years ago, was in 19th position, and now it's in second. So that's some very good news, is that we are seeing high growth potential firms across the entirety of the geography. But it's not all good news, and it does, I think, point to some of the things that you were saying, James, as well, because if you look at some of the international comparisons, yes, we all know that we create lots of new firms, at 5.4 million firms. And if you look at the number of startups on a per capita basis, we are very, very high, if not leading in the OECD. But if you look at measures that help you understand whether these startups are turning into scale-ups and growing, well, we tend to be at the bottom end of the comparisons. So this is versus OECD, and you can see that if you measure the percentage of startups that get to being more than 10 employees after 3 years or within 3 years, then we are close to the bottom. So there seems to be something here which is holding back the high growth potential, the scale-up potential. So one of the things that we also notice is that innovation, which we think is somewhat of a driver of this high growth potential, we also fall to the lower end of that. And you can see here some comparisons of smaller businesses who've introduced a product or a process innovation as a percentage of the total population. You can see there we are just below the EU average, and Germany and France being much higher. This is survey-based data. It has all the limitations of that, but it seems to show directionally a trend. And what we also know from that survey-based data is that SMEs view the availability of finance as one of the leading barriers to engaging in innovation. Now, what kind of finance are we talking about? Well, actually, you could be an early-stage firm. You've got your idea. You may even have worked up a prototype, but maybe you haven't commercialized. You're probably in need of equity. And that could be anything between 250,000, £1 million of equity. Or you could be a much more established firm, someone who is very profitable, but decides they want to increase the scope of their business in some respect. Maybe it's going to take you £2 million. So you might need more general growth finance, where the bank would not necessarily give you that finance. They wouldn't necessarily give you a loan based upon security if you don't have the security. So people have got to look more at the business characteristics, the potential for future growth. Now, that finance that I'm talking about is actually growing in the country. And I'm going to give you an example just of looking at the equity markets. And here on the right-hand side, you can see tracking of the number and the value of equity. We've kind of put to one side all of that leveraged buyout stuff, all of the MBOs. This is more of your risk equity. And it's quite encouraging that what we see is that has just about tripled as you came out of the depths of the financial crisis, and it's growing healthily. Very good news. But once again, the measures are still quite low versus international comparisons. This accounts for something like 3.7 basis points of GDP in our country. If you looked at this for one of the Scandinavians, such as Sweden, it's double. And if you want to look at it for the US, you would find it to be a factor more than this. We also know that this activity is relatively more concentrated in London and the southeast. And some of the stuff that we've looked at recently showed, we were looking at the north, the northern powerhouse, which the LEPs that we're working with account for something like 18% of GVA of the country. If you look at this measure of equity, then about 8% of the equity goes alongside that 18% of GVA. So there is a job to do, we believe, to build, to reinforce, develop an equity, a higher risk equity culture in the regions outside of London and the southeast, so-called golden triangle. Now, this is a little map about where we get involved ourselves, and you can see that we get involved at 3 different stages. Startups, I won't dwell upon that, but we work through the startup loan program. Scale-ups I'll come back to, that's the provision of that high growth funds and staying ahead, providing more choice to smaller businesses. The venture capital and the help to grow there in the centre, we think are key sources of funding for small businesses to improve their chances of reaching their potential. Venture capital, which is focused on the earlier stage of business creation and growth, and our recent Help to Grow pilot, which was announced last year by the Prime Minister and will be going into operation very, very shortly. What we did notice as we looked across the marketplace, there were some of these regional differences. And so what you'll see on the right-hand side, the 2 strips, are 2 of the regional initiatives we've recently moved forward with. One is the Northern Powerhouse Investment Fund, and the second is the Midlands Engine Investment Fund. The first 400 million, the second 250 million. And this is where we are working in partnership with the LEPs. So in total, there are 10 LEPs in the north and 10 LEPs in the Midlands. People there have pooled their European grants. We ourselves have put money into the equation. So if you take the Northern Powerhouse, it would have been a £300 million fund, but we put in our money to make that a total of £400 million fund. And we will be deploying those funds together with in partnership with the LEPs, a strategic board governed by the LEPs, to put that money to use to try and get it to segments of the small business population, including these high growth potential firms. The final thing I was going to say, though, is it's not all about finance. So when we go around the country, by the way, we're not just a London operation. We have an office here, but our headquarters is in Sheffield. We spend a fair amount of time out in the regions talking to people. We've been all around England and parts of the UK. And what we hear there are other issues holding back these companies as well. I mean, something about ambition keeps coming up. I think that's something to do with the role models of successful entrepreneurs, the experiences they've played and bring to new people on the same journey. We hear about skills. And are the right skills available? And importantly, we hear about whether or not there is the capacity, the knowledge inside the small businesses. Do they know what those finance options really are? So the final thing I wanted to say on this is that we think there are some important issues to address here around demand. I talked about supply. Every market's got supply and demand. The demand side is, do you have well-informed smaller businesses who know the potential options available to them? So one of the things that we've done here, working with many other partners in the marketplace, that includes the Federation of Small Businesses, the CBI, the IOD, the FSB, I mean, just about everybody who would put their hand up saying they have a role to play, we created something called the Business Finance Guide. It brings together these 16 or 17 different voices into one voice and presents one set of information for the small business. And we're getting that out through all the different routes that we can. We would love to get this out through the LEPs and through the Growth Hub, so this is a little bit of an ask. We would like to work with you to do that. It's going through its most recent update and will become digital and more interactive just before the summer. But it's had quite good reviews. The ICAW, who are the core partner with us, tell us it's their best-selling publication ever, but then they're trying to sell accounting textbooks, so there's not much competition. But we think it really does fulfill a need in the marketplace. So in summary, what I would say is that we believe that small businesses are vitally important to productivity. We believe that growth in productivity relies disproportionately upon a smaller group of high potential firms. There is some evidence that the UK smaller businesses lag behind in terms of innovation, and that finance is a barrier to that, as is some other factors. And we think that growth finance is key, as is providing the knowledge and confidence in the small business to understand the range of finance options that are available. So in summary, we certainly look forward to working with all the people here in this room in partnership with the LEPs to improve the finance conditions for smaller businesses. Thank you.